I can safely say that this is going to be the most important and useful video on this channel, and I can guarantee that you won't regret watching it. You want to see more trades that turn a profit? Then the first thing you should get comfortable with is technical analysis patterns. And I must congratulate you for stumbling across the best video on this topic. In this video, I'll tell you what patterns are and what they're for, how to quickly find them and predict when they form on a chart, how to trade using patterns, and most importantly, why all of them don't work, but I still trade using them. All this I will show with real examples of binary options trading. For today, I'm focusing only on binary options, as using patterns when trading binary options is slightly different from other markets like the stock market or the crypto market. And by the way, this will be the first and the most important video in a series about patterns, so I highly recommend you subscribe to this channel not to miss any future videos. Let's get to it. So, what are patterns and what are they for? Patterns are different formations seen on a chart. You may see these formations from time to time on completely different charts, and because of their cyclical nature, they're called patterns. Since they follow the same logic, when a pattern forms, we can predict where the price will go based on how the market usually behaves when a particular pattern is formed. This means that if we see a triangle on a downtrend, this is a chart heavily dominated by sellers, we understand that the price will most likely go down. Don't get worried just now, mate. I'm gonna go through everything in great detail. We're gonna try to understand why the market saw such a strong impulse at this particular point and why this impulse was directed downwards. So, starting with the latter question, why was it directed downwards? And to answer this question, we'll first need to understand why patterns work at all. And we've reached this point when we're going to talk about fundamentals that you can find in only very few places. No matter what kind of trading we talk about, there exists a concept of volatility. This is an indicator of how actively the price changes in the market. Here's an example of a high volatility section of the chart, and here's an example of a low volatility section of the same chart. And so, in any kind of trading where there is volatility, there's the law of changing volatility. This law tells us that sooner or later, high volatility will change to low and low to high. So, if we look closely at any of these patterns, we will see that the pattern points out that the volatility has fallen. And as we already know from the law of volatility, this means soon we're gonna see a new impulse. And how do we know in which direction the price will go? That we'll talk about a bit later. For now, it's important to understand that the most used patterns are nothing but the most popular shapes that a chart sees before volatility spikes. So, why is this video called Patterns Don't Work if this entire video keeps saying that they can't but work? Here's the thing. It's not patterns that work, it's the trader. Patterns only let us know when we should expect to see a new impulse on the chart, and learning where it will go, that's the trader's task. And the first thing that a trader does after they see a pattern is analyze the context. And what is the context when we talk about trading? Context is a combination of factors in the market that tell us in which way the price will go. And the most important factors that make up the context are, of course, the trend, because it's important to understand who's dominating the market right now, support and resistance levels, as well as understanding why they're formed, the price at which the market is trading. If, for example, the market is trading at the lowest price in a very long time, I wouldn't bet on it going further down. Context can also comprehend things like value and overbought, oversold indicators, and graphical indicators such as Fibonacci retracement. To sum up, Once a trader finds a pattern, he prepares to see an impulse, and only then he analyzes the context to understand where the price will most likely go. How do I find them quickly and predict their formation on the chart? Again, relying on the law of volatility. If we see that the volatility on the chart was high for a very long time and then began to gradually decrease, then with a high probability, soon we will see a pattern forming there. How to trade binary options using patterns? Since in binary options we cannot close a trade when we want to, we need to open a trade at the moment where the impulse has already begun and we realize that the pattern is starting to work. Let me give you an example. Let's go back to the example with a triangle on a downtrend. Let's say that after analyzing the context, we think that the price would most likely go down. In this case, we need to wait until the price starts to break the support and open a trade right at this moment. And the expiration time should be set to a longer period in case a correction happens. I recommend setting the expiry to at least how long it would take for 3 candlesticks to form. That is, if you're analyzing a 5-minute time frame chart, set the expiration time to 15 minutes. Let's try to consider an opposite situation. You've just analyzed the context and you're waiting for the chart to break the level of support, but the price went in the opposite direction. This may either mean that the price would rebound with the support, or that your context analysis was not entirely correct and an impulse in the opposite direction began. So, what would I personally do in this case? If the price hasn't changed in the opposite direction too much, if it hasn't grown higher than the previous peak, I wait until the price goes back and starts breaking the level of support. And if the price goes past the previous extremum, I just stop trading in this market. If my analysis didn't work out, it means I wouldn't be able to predict this particular market's movement. Well guys, if you liked this video, I would really appreciate it if you could support us by leaving a like and a comment. We've got a whole lot of videos about technical analysis and case study of me trading right ahead of us. So I recommend you subscribe to this channel if you haven't already. And as always, stay safe and be in touch.